Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 15th until the 19th of August. Looking at the highlights for the past week, as we mentioned during last week's outlook as well, on the stocks front we had three stocks that had their earnings releases, namely Walmart, Home Depot and Cisco. And on the Forex front, the main fundamental event that was in the highlight for last week was of course the FOMC meeting minutes, which took place on Wednesday. But for now, the disclaimer, as always, please do not all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So yeah, looking at stocks first. Now, over the course of last week, we had around about more than 3,000 stocks reporting their numbers. So although the number of stocks reporting their figures each week is going lower and lower, it still doesn't mean that we're by any means close to the end of the earnings season. We're closing in on it, but as you can see, we're still up in the thousands with of companies reporting their earnings releases. So definitely a couple of big names that are still due to release their figures as well. So over the course of this past week, as we said, we had roughly 3,000 stocks, and there were three of them that are also listed on Tixee's platform. Those three, as we mentioned during the intro, were Home Depot, Walmart, and Cisco. Now we're going to break down all three of them, not in very much detail, but just to basically gain an idea of the impact that these reports can have on the relevant stock prices. So we're going to look at Walmart first. As you can see, you can just search the ticker symbol in the top left, and you can just click on this little icon. I'll switch the time frame onto the daily one. So looking at Walmart first, the company reported its figures on Tuesday the 16th, so it was before the market opened, and we can pretty much see just by the chart itself, you can see because it was before the market opened, we saw the impact at the later stage during the open of the same day, and you can see this huge gap up that the stock price made here, which pretty much tells you the story of the earnings report as well. Walmart beat both the EPS and the revenue estimates, the former by 9.31% and the latter by 1.23%. So as you can see with the open, on the previous day it closed at around about 132.60, and the next day it opened at 138.90. So it was more or less like a 5% increase, and it even closed slightly higher towards the very end of the day. You can see on the following days we trended even higher, reaching a high all the way up to 142.50, but we have since scaled back down a little bit as we're trying to close this gap right here. But nevertheless, the impact of the report can pretty much be seen from the gap that the price made right here. Next up, we're gonna move on to Home Depot. Let me just pull up the chart. A similar story was written with Home Depot as with Walmart as well, in the sense that it beat both of the estimates, so both the earnings per share as well as the revenue. And you can see the gap up wasn't as strong, but nevertheless it still surged quite strongly on the same day. The figures were reported on the same day as Walmart, so it was on the 16th, and again before the market opened. And you can see with the open, we pretty much rallied from 316.79 all the way up. I mean, it reached a high of 332, but it then retraced a little lower and closed the day down to 327. But in terms of percentages, it was more or less similar to Walmart. Walmart, we said it surged by 5%, but Home Depot surged by 4.05%. But nevertheless, a pretty strong report, and again, just showing the impact that it can have on the stock prices. And then lastly, we had Cisco, it didn't really report their figures on the same days as Walmart and Home Depot, but they reported the figures on the 17th, and this time was after the market close. But again, as we always say, if it's after the market close, we're expecting to see the impact on the very next day with the open, and this is pretty much what happened here as well. So it had, just like Walmart and Home Depot, it had a pretty positive earnings release as well. beating both estimates, just like the other two as well. And yeah, you can pretty much see it surged from, let's see, the close here was 46.74, 75 more or less, and it opened all the way up to 49.4. So a pretty hefty increase as well, skyrocketing by almost 6%. So in terms of percentages, it was the strongest out of the three that had their earnings releases the past week. But yeah, overall, I mean, it's not always as straightforward in the sense that we're not always going to be getting either they beat both estimates or either they will miss both estimates. Sometimes it can have a mixed report. Sometimes it can have a pretty strong report beating both estimates, but then the company releases a press release which basically takes back any of the positives that were released from the figures, and just if they give like a negative outlook for the rest of the year, for example, it can also heavily impact the stock prices and make them move lower, for example. That's why it's important to also just keep in mind the press releases that companies put out afterwards. And yeah, you can always, of course, if you miss any of those, you can pretty much watch either the lookbacks or the outlooks. You're going to be discussing about those earnings releases anyway. But yeah, this was with regards to stocks for the past week. Now moving on to Forex, as we mentioned, the main fundamental event for the week was the FOMC meeting minutes, which, like we said, it took place on Wednesday. Now, if you remember last week, we had the CPI/inflation report from the US, which it did show a decrease from 9.1 down to 8.5%. But it didn't really mean that the Fed would slow down with any further rate hikes. Instead, with the meeting minutes, they reiterated how important it is to keep inflation under control, and that they must continue, the inflation itself must continue showing a decline over the course of the following months in order to encourage them to basically slow down a little bit with the rate hikes. And they basically said that it's largely expected that with the reports, the interest rate meetings for next month, we're likely going to see a further 50 or 75 points hike in terms of rate hikes, which is basically following a total of 225 basis points in rate hikes, or in other words, we saw interest rates rising by 2.25% so far this year. And in terms of the impact that the meeting minutes had with regards to the Forex markets, and not just those, we'll see from the charts here as well. Now, like we said, the report took place on Wednesday, which was, let me see the calendar, it was the 17th. So if we look at the chart here, so you can see it was pretty much this candlestick right here. And you can see the fact that they reiterated further rate hikes. Obviously, that meant strength for the US dollar in general. And we can see how the euro dollar dropped, and it dropped quite strongly, almost by 1% or 95 pips. And we also had a similar story looking at the pound dollar. And again, we have to look on the 17th right here. So it dropped by also close to 1%, 0.99 to be exact, or 120 pips. Of course, this we would expect to see happening across other major currencies that are also paired against the US dollar. So you can see a similar story, although it wasn't as strong with the Aussie dollar. But you pretty much get the sense. If we look at the dollar index as well, I can just pull up the chart here. I'll just remove these ones for now. And let's look at the dollar index. So over the course of the week, we can pretty much see by how much it has surged. So obviously, how this was translated with currencies that are paired against the dollar is that seeing strength of the dollar. So if we're looking at euro dollar, pound dollar, Aussie, Kiwi dollar, and so on and so forth, those ones will decline. And if we're looking at the dollar Swiss franc or dollar yen, that one would naturally increase in value. So let's just double check that as well. So let's just look at the dollar Swiss franc, and yeah, you can see on the 17th it pretty much surged because, like we said, again, the dollar gained strength in value. And it wasn't just the Forex market that this impacted. If we also move on to the commodities such as oil and gold, we're gonna pretty much see, if I switch this on the weekly time frame, so you can see basically it has pared back some of the losses, but you can see up until yesterday was pretty much down because, again, the dollar was gaining strength, So obviously those was impacting negatively oil prices, and you can see that there, if I just zoom in a little bit further, you can see that it reached a low all the way down to $85, and it's now clawed its way back up to 91. But again, we can just see, we can highlight this inverse relationship between the two. And if we look at gold as well, let me just zoom out. So you can see gold, it's pretty much, yeah, you can see how much stronger the inverse correlation between the dollar and gold is, because as we said, as we're surging strongly with the dollar, gold prices are obviously falling. And if we look at the chart here, it's pretty much, I can see it's dropped by $50 more or less. So I would say like a 2.6% decrease over the course of the week. So obviously it will impact different markets differently, but the point is that we can pretty much see this inverse relationship across the board. So yeah, this is pretty much as far as the look back and review for this week. Definitely stay tuned for the outlook, because we have one more important inflation figure coming out for the US next week. We're also going to be covering on this week's outlook as well. So yeah, I hope you enjoyed the video and you found it useful, and I'll catch you in the next one. Until then, trade safe.